So I'm going to give you the bottom line first. If you want to hear my analysis, stick around to the end of the video. But Scotts Miracle-Gro up massively after earnings, up 12%, and I still think it's a great buy here. Sitting around $164, PE ratio of only 18. With this company, you get the stability of a blue chip company, starting dividend yield of 1.6%. They've increased their dividend for 12 consecutive years, and you get a lot of the potential upside of the cannabis industry because Scotts Miracle-Gro is getting into the growing segment of the business with their Hawthorne division, which we've talked about in past videos and we'll touch on today. So let's get into it. Wahaha, what's going on, money lovers? Welcome back. Lots of exciting Scotts Miracle-Gro news to get to. But first, really quick, I just wanted to say thank you all for the continued support. We just broke 800 subscribers. Goal is to get to 1,000 by the end of the year here. This IBM video I just posted is blowing up, so check that out if you're interested in IBM. They just did a spinoff, but I know what you're here for. Scotts Miracle-Gro. Let's talk. This is a company that we've been talking about for quite a long time on the channel here. As you can see, here's a few of my other videos, which you should definitely check out if you're interested in learning more about Scotts Miracle-Gro. So today we're going to look at their earnings report, and their stock went to the moon after they reported earnings yesterday, up 12%. Big price movement. This company has been very undervalued for a long time, and I've been saying that in my videos here. And even where it sits now with this massive price increase, looks like it still has an PE ratio of only 18. So still a great buy, I believe. And as you can see, just how high it did run up at one point, and I think it could get back there when we look at some of the exciting developments with this business. So let's take a look. So their earnings call transcript is a great chart that they included here. It shows you their prior quarterly reports, what the consensus for their earnings were versus their actual earnings, which for fiscal Q2 and Q3 of 2021, they reported a surprise beat. So the estimates were $5.57 and $3.52. Scotts Miracle-Gro hit them with $5.64 and $3.98. So surprise beats there. And yet after each earnings report, the stock price just continued to go down and down more and more for really no reason. I mean, company was doing great, and yet the stock price was not moving in parity with the company. So had to correct eventually. I think that's what we're starting to see here. And so I do think that when you look at the chart here, Scotts Miracle-Gro is definitely a great buy. So here's their full year results as the fourth quarter sales exceeded expectations in the U.S. consumer segment. U.S. consumer segment sales increased 11% in 2021. They declined 28% in Q4, but that's because this is a seasonal business, and also, you know, they had a big rush during COVID. Everyone was home gardening. It would have been very hard to sustain that. So that's why you see this drastic decline, but nothing to worry about, because if we look at their quarterly earnings here, as you can see, if we just skip over the pandemic craziness, you know, go back to 2019 here, they brought in 1.20 billion, 1.17 billion, and now they're bringing in 1.8 billion, 1.6 billion. So they're definitely growing, getting back to some normalcy, and I'm not at all worried about that decline. This business is going to gradually continue to grow. Their full year Hawthorne sales, which has to do with their cannabis growing segment of the business, increased 39%, but declined 2% in Q4 despite growth in the US. Q4 they reported a loss, but again, as you can see, you know, there's a very cyclical business here. They get most of their revenue in 2 of the 4 quarters of the year. Just today I was doing some work, and what did I use for planning? None other than Scotts Miracle-Gro. So for the year ended September 30, company-wide sales increased 19% to a record almost $5 billion compared to $4 billion a year earlier. Almost 20% growth. That's crazy for a company like this, company of this size. So U.S. consumer sales up 11% on a full year basis. Consumer purchases were up 6% for the full year, with growth in every major product category. So really thriving here. On top of the $113 million of share repurchases in 2021, they're going to repurchase as much as another $300 million worth of shares in 2022. So that'll definitely help boost the stock price, get some shares out of circulation. And if the business is buying their stock back, you know that they think it's at a good price right now. So in Q4, company-wide sales declined 17% to $737 million. Their U.S. consumer segment, which was facing a 92% growth comparison from fiscal 2020, decreased 28% to $369 million. Nearly impossible unless you're big tech to continue to grow when you grew 92% in 1 year during the pandemic. There was also a shift in the fiscal calendar, and the fourth quarter had 6 fewer days than a year ago, which negatively impacted the quarter by $54 million. All in all, really nothing to be concerned about, I don't think. I think this is an expected drop, but like I said, when we look at that long-term chart, the business is still growing. So Scotts Miracle-Gro was an excellent buy in the 140s and 150s. I have a average cost basis of around $153. It got as low as $139, and even where it sits now at $163, despite this ginormous rise up, I think it's still a great price to buy in or dollar cost average. So I will definitely continue to add shares. There's so many great companies to buy these days. I need to find more money. So help the channel get monetized. Don't forget to like, subscribe, drop me a comment below if you have any questions. This is Vinny from the Investment Club, and I'll see you next time.